Hi everyone, welcome to the LAR. How are you guys? Can you hear me? Can you see my screen? Is everything okay? I have downloaded a bit the quality of the transmission today in order to see if we don't have the drawdowns we have been seeing lately in the room. As you may know, Dale Pinkert is the main host of this show, and he has been submitted to surgery. Hi, Mauricio. Mauricio says hi. Okay, yesterday. So until he gets better, I will be trying to cover a bit his place. Of course, I can't. I don't fit his shoes, but I do my best to help you out with anything or any doubt you have around about the market. Okay, so. We had a quite interesting Fed minutes yesterday, right, guys? The Fed has been a bit more dovish than everyone was expecting. They shed no lights over upcoming or possible rate hikes or when they may come, and that's the main reason we saw the greenback easing strongly across the board and extending its slide during Asian hours, but. Sounds perfect. Okay, and the video? Can you tell me if the video is okay also? I know I downgraded the quality a bit today. Oh, okay, great. Thank you, Mauricio. Hopefully I get a grip on this before Dale comes back. Okay. Oh, my God. Anyway, I would say the greenback had a nasty ride to the downside. Okay. But what I was watching, particularly when it comes to the euro dollar, I did not grab the full slide for 140 to 125. In fact, I take the highs around 137, late June, early July highs, right? And draw a Fibonacci retracement from there to that 125 low we saw post payrolls last Friday. And the fact is that the rally has stalled right at the 23.6% level of that retracement of that rally bearish run, right? And we have also the daily 20 simple moving average there with a strong bearish slope, right? Also offering some dynamic resistance. So this seems mostly a corrective move. We can go out screaming bottom. Okay, that's my view on this, despite we don't have any clues about what the Fed will do next or when it will do it. The fact is that, remember the minutes we heard of yesterday are from before latest employment figures, who had been outstandingly positive, right? So later this month the Fed is expected to trim the last $15 billion of facilities of latest of quantitative easing, and therefore the market can resume its dollar buying, or anything else can happen. Anyway, we have a Draghi speech also today around 15 GMT, if I'm not wrong. Okay, it's expected to speak in a panel in Washington about economy, but you know, last time Draghi spoke in a public pace, he surprised everyone talking about economic policies, something not quite usual among central bankers, but seems this time Super Mario is determined to extend its shell bone into the whatever it takes and back up at the most. Okay, anyway, what another thing, I'm saying too much times anyway. Another thing that's remarkable about Fed minutes is the fact that the Fed members express their concerns about the global economic slowdown they are seeing and the stronger dollar. They are maybe a bit concerned the strength greenback is having will force inflation higher too fast soon, maybe even before the time they are estimating, and we don't know, they are going to hike rate. Yes, Hutch Draghi is a candle shaker, so beware of that. It's in a couple of hours, so if you're a short-term trader and can be outside the euro dollar at that particular moment, would be great. Anyway, we have a positive weekly report of unemployment claims in the US. I don't believe that it's enough to pull dollar higher, but that's what we are seeing early US opening. I honestly did not watch what's going on with stocks. Okay, we have that wild ride yesterday to downside and the strong recovery after the Fed. Remember we were talking or trying to talk about the lows established last week in the Standard & Poor and the break of the trend line. Again, we had a false break, hovering, and the index bounced back from that level, but remains capped at the level Dale was marking us last week. Remember, it's 1968. So in here, things are not yet quite clear for me. And Ron, hi and welcome. The fact is that we heard some from Dale early yesterday. He did well with his surgery, but of course he was not in the best shape ever. We did not speak to him. I'm really eager to call him and see if he's doing okay, but I'm holding myself back because he's has been under surgery less than 48 hours away. If I have any new, I promise you I will tell you as soon as I know, and I will tweet about it as soon as I know, okay? But he did well with the surgery, and that's the most I know about it. Sorry, I wish I know more. I'm waiting for news. Mauricio is calling his wife, so I do believe that if we know something, we will tell you, okay, guys? I do believe it's a bit too early to call him, okay? I'm giving him time to get back on track, okay? But I promise, as soon as I know something, I will let you all know, or either here or in my Twitter account, is later, whatever it takes, okay? Like Draghi, I'm like Draghi, whatever it takes. Okay, anyway, not much going on in here, what I can see right now, but I keep on watching both levels in the Standard & Poor, the resistance, Dale remark, right? And the low test yesterday. I don't know. I believe that we are seeing some relief among stocks traders after what the Fed did yesterday. The Fed, I believe, brings sort of relief to stocks traders. But anyway, I was thinking, right? I don't know what you think, guys, but all this party, the bullish run in stocks, was due to the fact that there was tons of easy money in the States, and of course that money was meant to belong to common people like you and me, and to boost consumption and boost the economy. And of course, if you don't have a job, you don't ask for a credit in your bank, right? And that's what happened. The banks were uploaded with money, and that money went all to the stocks, right? And that's why we saw those record highs earlier last month, in both Dow Jones and the Standard & Poor rally. And the party is about to get over, right? There will be no more easy money starting by the end of October. So that's why stocks are tumbling, but I don't see them ready to give up. I do believe, yeah, that if we have a break below those lows that held twice in there, and below this one in Dow Jones 16,585 or so, then we may enter in panic selling in here, and that should affect the market. Another thing that seems important to remark today is that lately, right, we have been seeing dollar rising with stocks, falling with stocks, okay, meaning trading alongside with them. And today it seems that after what happened yesterday with the Fed, we went back to the inverted correlation we had for the last 6 years or so, right? I don't know. It's a change in the market, and it's a big one, okay? The correlation in between dollar and stocks had always been positive. It turned an inverted one after 2007 crisis, and now it seems that we are going back to a positive correlation, which is not yet 100% clear. In fact, nothing in the forex market it's 100% clear, right? But anyway, what I'm watching there is that today we are back to the inverted correlation with dollar under pressure along with stocks. Let's see how these things develop. Keep an eye on that, because it's important for upcoming market reactions. It's not something that may help much an intraday trader these days, but will surely do in the future. And as for the euro, the pair has been testing the 127 level right now, but this has been the level we have been looking for to be broken to the upside, right? Remember, we talked about this a couple of times the last day. So if this level holds, I don't see much of a bearish pressure, but if we break below it there, I do expect a short and quick run towards this 2660 price zone, right? And if we lost this one, I do believe that the bears will get back on in control of the pair, okay? But so far, not much of that going on. And if we break above this Fibo resistance at 2780, then I would expect further gains. I was watching this area 28, 20, 40. We have some intraday lows and highs in there, so that's the next bullish target in a year. And for pound, I draw a Fibonacci retracement, sorry, of the post Scottish referendum slide. Okay, this is the high we reach after the no win, and the low set last week, and sorry, at around 59.50. Okay, so far the pair has broke above the 38.2% retracement and holds above it. 61.70 is the level. We have some lows a few pips below, so watch that area. As long as those level holds, I do believe the downside will remain limited. Okay, I have to breathe sometimes when I speak, right? Sorry. I will try to. Anyway, I do believe that if we lost the level, then the risk will turn back to downside, while we need to overcome this level to confirm a bullish run. Is the 50% of the same retracement, 62.35, is my level to watch for a buy in a year, okay? Right now, right here. And for the dollar Japanese yen, it has been a good slide. Remember, we talked with Dale several times about this possible being a test of 107.60 price zone. In fact, we lost, we slide a couple of pips below it today. I do believe that we are in a sort of an inflection point in here, you know. If a pair it's unable to recover quickly above 108, there's room for further falls. 106.80 comes as my next possible bearish target, and if we lost this one, former highs in the 105.40 price zone comes next. Okay, I don't see much of a yen strength going on. I do believe that the market is a bit tired of Japanese authorities jawboning down the yen and not backing up with more stimulus. So I do believe that the market is considering some risk of a correction, and therefore taking profits out of the table, and that's what we are going to do to see. So far over the coming days, sorry. And of course, if stocks remain under pressure, there's not much room for a dollar Japanese yen recovery. Okay, we have been live like 15 minutes and had no drawdown, right? So pretty good. Anyway, do you have any comments, questions? Okay, I have to look from some Elvis music or something like like Dale does. And so you don't get bored just hearing me talking. Okay, let me take a look at the calendar to confirm what we have ahead. We have a minor number from the US gold sales inventories in about 15 minutes, but yeah, I do believe that the market may have a stronger move or remain on hold until Draghi in about an hour and a quarter. Okay, not much going on right now. Yeah, indeed, Hutch Dale needs to rest, recover his health, and he should not rush to come back. But well, I don't know. I'm the kind of person that feels that you get better quicker if you do what you like in your life, right? My mom just retired a few ago. I see her a bit depressed, do not doing too much, so I guess she miss moving. She has nothing to do right now, and that's not a good idea for a person that work all its life. I don't remember having not work in my life, and I don't imagine myself not doing anything. So sometimes a bit of work helps to get better sooner, but that's me. Anyway, I will be here trying to help him if he wants to come back earlier, okay? Oh, okay. Someone's asking about views on the Euro Japanese Yen. In here, I have another Fibo, a bigger one, a daily run. I saw that Fed was not enough to push price above this level, so I keep a bearish tone in here. I keep a bearish view. You know, guys, right now we are pretty close to my selling level, the level I'm looking to break to confirm a downward continuation, which is 36.90 price zone. I do see some downward potential in here. I'm not seeing much of a strength for the yen crosses. What I'm seeing, usually watching the yearly chart for all Shen crosses, is both 100 and 200 simple moving average, okay? And the fact is that we stalled at 200, we found support at 100, back to 200, and now we're breaking through the 101 with a bearish momentum. So my take is that we are going to see further declines in here. If we break recent lows, 36.50 area, we may go back to that lows around 35.80, okay? And honestly, I won't be a happy buyer in this one unless we recover this this area, 37.80, 90 price zone. I would like some sort of 4-hour candle opening or a bullish acceleration through this level to start thinking about buying any kind of yen crosses, okay? Got to be honest, I'm not a big fan of Kiwi. I don't follow it too much. That channel, yeah, it's probably an old one, okay? I usually mix my views with the fundamental situation of a country, and I don't know much about New Zealand. Shame on me, okay? But what I do know is that the central bank wants a lower currency, and what I do know is that the central bank has been practicing intervention since last year, okay? So I don't see much of an upward strength in this movement. I do believe that it's corrective. We have a sort of a double low in here and an attempt to break in this neckline, which we will have confirmed that that figure is now seeing a pair back below it. So I do believe that if we close the 4-hour candle or the daily candle below this area, below 79, let's say, we may see further downward potential in here. Thank you, guys. Thank you for the comments. Anyway, I do believe that the downside is still a risk in here. I don't see much of an upward potential, particularly because dollar has not confirmed a sustained weakness globally. You know, guys, if I see the euro breaking above this level and the pound steadily advancing above 162, then I would consider that the greenback is weaker than the kiwi, and then I will revert my view in this one. But for now, I do believe that the downside is favor. I have this level, the 80-50 price zone, draw as a sand in the line. You know, if we are going to see an upward move in here or some bullish strength, I'm trying to say that, is if we regain this level, okay? Above this level, I do expect some upward potential in the pair. Short term, at this particular point, I'm not pretty happy with what I'm seeing. I don't see it clear, but I will take this low, post Fed minutes low at 68.90 as my breakdown level, okay? If we see an acceleration through that low, then risk will come to downside. Market is a bit uncertain today after what happened yesterday with Fed. Dollar is clearly in correction mode. But whether if this correction or not will extend, I do believe that it will take for euro to break that level and pound above 62, and maybe yen extend below the low to confirm the global dollar weakness, and therefore see some support in commodity currencies. Okay, and what I see on euro OC. Okay, that long trend line was drawn. I have to be honest, I do believe that the euro is still among the weakest currencies across the board. See what happened today, right? So far remains weak, and I don't see much of a reason for a euro strength, sorry. Pretty choppy behavior in here, but what we are seeing are lower highs, right, and lower lows. So I do believe that the dominant trend is still to the downside. Furthermore, what I see, for me, it's a critical level. This the purple moving average you see in here, okay, it's a 200 exponential moving average. Okay, it's not meant to provide me any kind of signal, right, but it's meant to tell me where the market strength is and which is the dominant trend at a certain point, right? Usually when the pair reach the level, the moving average, it tends to act as a strong support or resistance level in the 4-hour charts. Okay, see how it struggles to break below it. So though I still believe that downside is favor, I would like to see at least a candle opening below this area to confirm a decline, probably towards this level. I don't know, euro is weak, OC seems to be in recovery mode. Employment figures were a bit better than expected, not that as bad as it should be in Australia, but still not good. More of a range what we are seeing in here, so little confirmation. But if we break below the 200, then I would like to see I would attempt to sell. See that the 20 simple moving average is losing its slope. I paid a lot of attention to the slopes of the moving average, because when you have a strong upward slope, then you know that bulls are in control. That's my phone ringing. Hope it's not my mom, hope it's not school. Anyway, it usually tends to provide support, right, or resistance when we are talking about a bearish one. That goes for any cross, is the 20 simple moving average. And as long as the slope holds, then the trend will remain in place. Right now, when moving average turned flat and you see 20 close to a 200, that means the market is not having a good direction. Okay, yeah, this is a 4-hour chart. I'm used to watch the 4-hour charts and see where the market strength is, or if we have a dominant trend and where to go with it, and then I move back to the 1-hour chart and try to trade in there. Okay, that's me. I don't know. Everyone has a different system, and all respectables and our different views in the market. Anyway, our friend Euro's managing to bounce some back. What are stocks doing? Anyway, I was trying to say any trading strategy or system is valid as long as you understand what you're doing and you have tested several times. Okay. Yeah. Hope I don't know. It takes me to start talking in a live coverage and in here for the phone to ring, or my neighbor's dog to start barking like it was the house breaking loose. But I'm okay with that. I'm used to the sounds. Okay, at least we don't have my cat screaming. That's good news. Anyway, do you have any other comments or suggestions or ideas? If not, I will have to leave you guys. I'm so happy, so happy. I don't have a disconnection over these 25 minutes. You can understand how happy. Not even if I had won 100 pips, I would be this happy. How is Dale? Dale is. We have news that he has came out of its surgery okay, but not much more. The fact is that it has been less than 48 hours from his surgery, so we are a bit on hold to call him, let him rest before giving him a call and ask how he is. I promise, as soon as I know anything, I will let you know or tweet. Okay, but I don't have more than those news. Lil Chase says, do you like breakouts or buying pullbacks, selling rallies for a trading strategy? I like both. Will depend on the market is and market conditions. You know, I always said we had a trend in the euro, a real strong bearish trend. So in that cases, selling selling pullbacks was the idea, selling rallies, right? Right now we are in reverse mode, so a breakout will be my strategy rather than trying to sell at higher levels, right? It's depends on how the market is doing a certain day. Keep in mind that I'm long-term blind, okay? I don't see much the market beyond what may happen over the upcoming hours, days. I really don't like to do long-term forecast in currencies, okay? But this is my way of trading. I like to open trade and close it in the day if possible. I don't like to stay in the market for hours. So I'm trying to adapt myself to current market conditions, right? Right now the market is trying to sell the greenback, and recent slide towards 127, and the upcoming bounce is telling me that bears are still far away from taking back control in the euro dollar. So I would be looking for a breakout above the recent heights in a year, for example, okay? Yeah. Well, I have to. The first thing that you learn when you get old is to be honest with yourself, you know? I don't dare to do long-term forecasts because you can't anticipate. I don't know. We couldn't have anticipated the 142 reading in past months payrolls, for example, that we could not anticipate stimulus sometimes. Okay. There are a lot of things we cannot anticipate in the market, so I say short term, okay? And how far do I generally look out in the future? The most I can see is a week. Okay, the most I dare to forecast is a week with an accurate view. Okay, and that's the most. But that's it. That's the most I dare to do. Bali's a scalper. I don't know if a scalper is. I don't use 15-minute charts. I don't remember having opened a 5 minutes one. I don't know, in a long time. Okay, for example. But anyway, I like short term. Okay, and it's okay. It's me. I'm happy with me, and that's it. Okay, guys. I will have to leave you because I don't have lots of time, unfortunately. I wish I could stay longer, but I'm really happy. I could do all the session without problems. I will try to stay longer next week, okay? Yeah, I looked for 20-30 pips, sometimes even less. I'm happy with that. I don't need no more. Okay? Anyway, thank you for being here today. It has been great. Keep an eye on Draghi in about an hour. Okay, guys? Don't stay inside the euro if you are like me and go for 20 or 30 pips. Don't take positions in the euro before him. Okay? And see you back tomorrow, okay? Yeah, I will be doing this every day until dates comes back. And I will try to say in between. I don't know. I will try to stay more than 30 minutes next week. Okay? I will try to do a bit longer, but I have other commitments also, so I will do my best to fit them all. Okay, guys? The good ones always leave early. Thank you, Hutch. Thank you all. Rick also. Thank you, really. It's a pleasure to be here. Okay? And see you back soon. Okay? Tomorrow. Bye-bye.